Welcome back to the channel Stock Market Analyst, where we break down the most intriguing investment opportunities in today's market. If you're chasing high yields and curious about Tesla-linked ETFs, then you've probably heard of TSLY, the YieldMax TSLY Option Income Strategy ETF. But is it a smart play or a risky trap? Today we're diving deep into a full TSLY stock analysis, covering strategy, performance, risks, and whether it deserves a spot in your portfolio. What is TSLY? TSLY is not your typical ETF. It's part of the YieldMax ETF family, designed to generate monthly income by using a synthetic covered call strategy on Tesla stock, TSLA. That means it doesn't hold Tesla shares directly. Instead, it uses options contracts to capture premium income. According to TSLY ETF explained, is it worth investing? This ETF aims to benefit from Tesla's volatility without owning the stock outright. It's a derivative income play, collateralized by US Treasuries and cash, making it a unique hybrid between equity exposure and fixed income. Performance and yield. Let's talk numbers. TSLY has been making headlines for its eye-popping dividend yield, which has ranged from 68% to over 90% annually, depending on market conditions. In TSLY, option income ETF yielding 68%. Is this the best? The creator breaks down how TSLY's monthly distributions are calculated and why they fluctuate. The ETF's yield is driven by the premiums collected from selling out-of-the-money call options on Tesla. But here's the catch. While the yield is high, the price performance has been volatile. TSLY has traded between $690 and $18.22 over the past year. So while the income is attractive, capital appreciation is not guaranteed. Strategy breakdown. TSLY's strategy hinges on Tesla's implied volatility. When volatility is high, option premiums are richer, which boosts income. However, if Tesla's stock rallies too hard, TSLY's upside is capped due to the covered call structure. Let's talk about how this ETF destroys Tesla's upside by capping gains, making it more suitable for income-focused investors rather than growth chasers. The ETF uses flex options and standardized exchange-traded options, which gives it flexibility but also adds complexity. It's actively managed, meaning the fund managers adjust positions based on market conditions. Dividend history and monthly payouts. TSLY pays dividends monthly, which is a major draw for income investors. Recent payouts have ranged from 0.30 to 0.76 takes per share, depending on Tesla's volatility and the premiums collected. TSLY provides investors a significant income alternative. Host highlights how TSLY can be used as a cash flow generator in retirement portfolios or passive income strategies. The ex-dividend date is typically around the first week of each month, so timing your entry can be important if you're chasing the next payout. Risks and criticisms. Despite its high yield, TSLY is not without risks. Critics argue that it's a yield trap, offering high income at the expense of long-term capital erosion. TSLY is still a scam. Here's why. Takes a skeptical view, warning investors about the ETF's declining share price and lack of real Tesla exposure. Can TSLY keep crushing? 73% yield are not a typo? The creator explores whether the ETF can sustain its massive yield or if it's headed for a correction. Key risks include Tesla's price volatility impacting option premiums, limited upside due to covered calls, potential NAV erosion over time, and high expense ratio, 1.04% TSLY versus other Tesla-linked ETFs. TSLY isn't the only Tesla-linked ETF. In YTSL, huge dividend increase, YTSL, purpose versus TSLY. The host compares TSLY with YTSL, another income-focused ETF. While both aim to monetize Tesla's volatility, TSLY uses a more aggressive option strategy, resulting in higher yields but also higher risk. YTSL may offer more stability but less income. Investors should weigh their goals. Are you seeking maximum yield or do you prefer capital preservation? Who should invest in TSLY? TSLY is best suited for income-focused investors, those comfortable with options-based strategies, and investors who understand Tesla's volatility. It's not ideal for Long-term growth investors, those seeking direct exposure to Tesla stock, and risk-averse retirees without options knowledge. So is TSLY a smart investment? If you're chasing yield and understand the mechanics of covered calls, TSLY can be a powerful tool for generating monthly income. But if you're looking for long-term growth or direct Tesla exposure, this ETF might not be the right fit. Always do your own due diligence and consider how TSLY fits into your broader portfolio strategy. Thanks for watching. Drop a comment below. Are you investing in TSLY or avoiding it? Don't forget to like, subscribe, and share this video with fellow investors. Until next time, keep your portfolio sharp and your dividends flowing.